For TraderInsight.com, I'm Adrian Manz, and let's do a strategy session about the Around the Horn Scalper service, and this time we'll take a look at how to handle opening reversals. So on the trading plan today, we had Celgene and Facebook, and both of these opened pretty far down from the previous session's closing price. So let's look first at Celgene and then at Facebook and take a look at how these trades could be handled. So in the case of Celgene, here we've got the 5-minute chart, and we see that the stock opened for trading down about $1.50 from the previous session's close and then started climbing higher. And our first line is 87.27. That's the first entry line on the trading plan. And we see that price did poke up and through there and then made a little retracement lower before coming back up and going in again. So sort of a best practice on this kind of a thing, especially around these opens when it's trending the way that this one was, is to let that first pop go without you. And if you miss the trade, you just miss the trade, especially if the spread is a little bit wide. So if there's a 10 or 15 cent spread on the trade, it's best to wait for it to come back in again and then round up, which is what we were looking at on CELG. The second time that it makes this penetration of 87.27, it's not as impressive as the first time, but it lines up as a much better setup. We had a trending move higher, followed by that check mark pattern, and even though we didn't get a real convincing pop through, we had a real good place to put a stop loss down here at 87.09, and as it started moving higher, then we got a move from 87.27 to 87.56. Then we got a continuation move up to 87.85, and no real entry opportunity here, right? Because we're not looking to enter the stock as it's going down. But once we got this move lower, again, we see this sort of check mark kind of a move up through 87.85 and up into the 88.20 target again. That's not to say that I'm looking for every one of those entries. A lot of times I'm just watching the first hour on these, but that's how the Celgene trade's set up on Thursday. Now let's look at Facebook. This was a similar scenario, and this is one of those cases where if you didn't get it when it moved through 64.51 and moved up to 64.77, even though it made this move between the bands, I didn't care because this was not a clean setup. There's no kings and queens entry, there's no switch hitter entry, no pullback entry, right? So it doesn't really make sense until we get this move here. So this movement up to the 64.77 line, back down again, and then it pops up and through. That one makes sense. Now it wound up trailing us out for a small loss, but that's okay, right? Because the important thing is that we stick to our guns and trade these the way that we're supposed to trade them, not trying to shoot for the moon every single time. Then, as far as advanced entries go, we had this little triangle pullback here and a nice pop up through the 64.77 line, got us to 64.99, and then ultimately pushed to 65.23 without us. So opening reversal days can be tough to trade. That's because we wind up down inside the range so much. We get these moves that are really an exaggerated open to the downside, in this case about $2. And by the time it starts trending higher again, it loses a lot of that orderly trading that we're looking for with these. Some traders look to catch the oscillations between the bands, and that is definitely a valid way to trade this. Pick it up every time that it comes down through this band and back up again, and then release it as soon as it gets up to 64.77. But that's an advanced entry technique. And for the most part, even after looking at these for a long time myself, I like to stick to what's simplest and what's most reliable, and that's that kings and queens setup or the switch hitter pullback intraday. So there you have it. That's a little strategy session on those opening reversal moves. Sometimes it's best to just sit on your hands when they happen and just take a step back and say not every single entry is going to be straightforward enough for me to make heads or tails out of it. So occasionally it's just time to pass on a trade, and when I see something that really looks like it is starting to oscillate between two bands, it might just spell opportunity. If you have any questions, shoot me an email, adrian@traderinsight.com. Best trader education anywhere, only at Trader Insight.